Hey everyone, Couch Investor back to another video for you today. Now I know you're probably all tired of hearing this already. Google is crashing, Google is going out of business. It certainly is trading in the last couple of days as if it is going out of business, and Google search, YouTube, the cloud, everything is just dying. Now I'll keep repeating this over and over and over whenever I see this. We've seen this with Meta, we've seen this with Netflix, I've seen this with Tesla more recently as well. When the noise is the loudest, that probably means that we're near a bottom. Now, that does not say that Microsoft is not causing or won't cause more trouble to Google. No, that's not what I'm here to say. But I'm here to paint the bigger picture. For example, Microsoft Bing has actually been gaining market share for a while now. Google Search has actually been losing market share for a while now as well. Not that much, as you can see here on the picture. In 2010, it had 90.77 search engine market share. 2022, 84.72%. Now Microsoft Bing went from 3.4% to 8.6%. So okay, a nice little jump there. But if you really want to know what actually happens with the search engine market share, I'll navigate you to this one right here. So as you can clearly see, while desktop, it's true that Microsoft Bing has been growing a little bit over the years. Mobile is where it's at, right? We've heard about this mobile advertising. The use of mobile is where the money's at, and so basically where all the eyes are at as well. And you can clearly see what happens there. Google 96.5%, Bing 0.5%. And overall, Google is still at 92.9% and Bing is just at 3%. That does not mean that Bing can't grow in mobile or on all devices, but it just means that currently right now Google is still the king. Now, and if we want to see what happened throughout the last couple of years when it comes to search and other revenue for Google, even though we've seen that the numbers for desktop has come down a little bit, well, search and other revenue in March 2019 was $22.5 billion. Right now, that's $42.6 billion. So while, let's say, it has been losing a little bit of market share, that did not stop its business from growing quite nicely over the last couple of years. Now, I'm not going to make a comparison video, Google, Microsoft in this one. I'm just going to focus on Google in this video, make another one for Microsoft. So I'll keep both videos as short as possible. Now, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. And do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Now, with all that said, Google is still growing, although now a bit slower because, well, the ad market has had a pullback. We don't know when that will stop. We don't know when that will reaccelerate. But the overall business is still pretty solid, as we've covered in a couple of videos ago. But obviously now the big elephant in the room here is, well, the sudden emergence of ChatGPT and its integration now with Microsoft Bing, all the new features, etc. What happened next is, in my opinion, a big mistake by Google. Alphabet is their event in Paris. That event basically caused them to lose $100 billion in market cap. Maybe not directly, but indirectly for sure. If you're not aware what has happened, let me show you. So they basically wanted to show their new, well, LLM, so AI service powered by Lambda, introducing BART. So they basically show us here a couple of things. You can ask a question here, more specifically about the James Webb Telescope and how you can tell your 9-year-old in this case, some fun facts. So one of these facts here was wrong. It says here that it took the first pictures of a, what does it say here? Of a planet outside our solar system. So this guy right here caught this mistake, tweeted it out and corrected it. And this basically probably is why the stock crashed, because, well, suddenly you want to show your major new feature here, BART, on Lambda, which should challenge ChatGPT and OpenAI, in this case Microsoft as well. But on your first demo that you show us, that you rushed, by the way, this event was rushed, you show us and it has a mistake. First of all, this just shows you also the dangers of using LLMs because, well, it basically gave you the answer and it was super confident. If nobody is double checking this, well, you are probably gonna get misinformed. So let's see what happens with the, well, evolution of these LLMs. Maybe they can fact check themselves. We'll see what happens. But In case you missed this event, this is what happened. Now, going back to the issues, going back to Google. Having BART is not free either. According to Morgan Stanley, every 10% of Google search queries moving to language models, adding about $1.2 billion in operating expenses. It still has an overrate rating and a $135 price target. But this is true, unlike with Microsoft and Microsoft Azure and ChatGPT OpenAI, where when you go on there, it's costing OpenAI money, but since it runs on Microsoft Azure, it's actually a positive for Microsoft. With BART, it runs on, the Google servers, which is costing them money, as we've seen. So that's a big difference here as well that you have to keep in mind. And now, if Google wants to make search better, easier to find, instead of search, you can ask and get responses, a bit like what Microsoft showed us with the new version of Bing. What will happen basically is, you'll have less people that will click on links, which means less people would be exposed to ads, which obviously will hurt the business. Can also be said for YouTube videos, instead of searching on YouTube how to this and that, maybe a recipe or whatnot, you go, you write, and you get the recipe step by step. That might impact the business negatively. In this case, cannibalizing one part of your business that has been working quite well. Of course, I don't want to note that this will not happen overnight. This will take a long time to, transform. That said, there are still a lot of people that will just go on YouTube and watch a video of how exactly you make a chocolate cookie. Of course, you'll have some people that will get your answer from Bing or from Google, printed out, who's printing paper out these days, but look at the recipe and do it and not click on any other links. Of course, that might happen. Now, talking about YouTube, a huge part of the investment thesis when it comes to Alphabet. In my opinion, it's a part of the business that will keep on growing for years and years to come. We have not seen the peak YouTube yet, not when it comes to advertising, not when it comes to monetization, and certainly not when it comes to making this platform extremely shoppable. We've seen some little features here and there, some integrations, but I don't think we're there yet. I think there's still a lot of potential for YouTube. Of course, right now, as we can see here in the earnings report, right now, yes, year over year, it is down, YouTube ads here. But of course, we know that this is because of, the pullback in ad spending. But overall, during the years, this part here has been growing quite nicely. Now, according to data from Nielsen, YouTube commanded 8.7% of total TV viewing time in the United States in December, compared to Netflix 7.5%. Now then you still have YouTube Premium and Music. They have total subscriber numbers of around 80 million. And it was reported last summer that YouTube TV has surpassed Walt Disney's Hulu Live TV in terms of customers, making YouTube TV the most popular internet-enabled TV subscription service domestically. And obviously with the NFL Sunday Ticket, that might increase that number. So circling back here and trying to conclude everything that I said, of course, Google right now is in a challenging spot. They suddenly see another giant in the industry attacking one of its most lucrative businesses. So of course, it has to suddenly move a bit faster. But in my opinion, moving fast right now with a broken product or with a not a fully functional product is not the right move. It still has and still probably will focus a lot of its attention on its core business. Advertising, search, YouTube, and cloud. Cloud has grown quite nicely this past quarter, although it is still not profitable, far from being as profitable as Azure and Amazon AWS, but it is growing quite nicely. So for those that think that suddenly Google is not investable anymore, it's going out of business, well, it cannot be further from the truth. It will have some challenges. In my opinion, it might overcome these challenges, but probably it will lose more market share in the years to come. It had a monopoly for years and years. Now there's another player in town, and that name is Microsoft. Not a small one, but we're going to talk about Microsoft in another video. Now, of course, do share your thoughts down in the comments below. What you think about the possible scenarios that might happen here, let me know down in the comments below. And if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.